And welcome everybody. This is our special live event. It's our Commodities Playbook. I am your host, Steve Strazza, Chief Market Strategist here at All-Star Charts, joined today by Jason Perz, our resident CTA, head of commodities, head of fixed income, currencies, our futures guy. What's up, Jason?
Hey, what's up? You basically name it across the world. I'm probably trading it. That's the way it's always been. So excited to be with you, Steve. Stuff me and you, when we get together, we always have great stuff to give the people. Excited to be with you guys today. Definitely talk to us in the chat, keep involved, and we got a lot of stuff to get through today.
I've been pumped about this call because I can't remember a time, I don't know, over the past 5 years where as a team, like as a group, the analyst team, even Sean, JC, everybody is just out here pounding the table on commodities at the same time. It's almost like too good to be true. Like we're all on board this commodities train. And I think we're early too, Jason. Like if you think about it, it's really just been gold. What are we excited about?
Oh man, I mean, look, when you're looking at the commodities complex, and this is what we're going to go through today, is you want to think of it cyclically. You want to go from gold and then think what's going to move next? Is it going to be silver? Is it going to be copper? And then after those move, we want to think of what's going to be moving next. Things like in the energy sector, whether it's natural gas, oil, gasoline, heating oil. That's the next thing we would look at. And then go a step further, and then we just see the rest of the commodity complex start to move. Things like soybeans, the rest of the softs, and so on. And most importantly, how these affect stocks in these sectors. There's agricultural stocks. I know they haven't been hot for people for a long time, but they do make a lot of money when they move. They really move. So there's a lot of money to be made there. There's stocks inside the metal sector. There's stocks in the energy sector. So we're going to get through a bunch of that today.
And commodities in general, you make a good point. When they trend, they really trend. When commodities go, they go, right? And we have vehicles. We have leveraged high beta equity market vehicles, some subgroups more than others for sure, but we do have options. So let's tell that story, right? Because when commodities move, they tend to move in sequence. They have this beautiful routine to them. If you look back through history, right, at past commodity cycles, why don't you talk a little bit about how that looks? Because we came off the COVID lows with an absolute banger of a rally. Commodities were the best asset class off of those pandemic lows a few years back. And then it's been dead money ever since, just consolidation mode. But if you zoom out far enough on these charts, this is the S&P Goldman Sachs Commodities Index. If you zoom out far enough, what you see is an uptrend leading into these consolidation phases. So talk about this sequence and kind of where we go from here. I'll throw up a gold chart to kind of lead your way.
Yeah, so when we're looking at this, once again, go through my career, being a futures trader, there's a lot of years in the 2010s that basically I'm shorting a lot of the futures contracts, being gold was moving down at points, oil's moving down at points, and so on. And really, we didn't have any signals to say this gold cycle is going to really start to move. And next thing you know, we're going to see the rest of the commodities complex. So really what I always say is gold rings the dinner bell. So get back to in all those years of basically it's very rough to be a commodities trader on the long side. Short side made a lot of money. Long side, not so much. So go into 2020. Now we start to see the markets getting flooded with liquidity. COVID created supply issues and so on. And then we started to see gold really take off. So gold took off starting in all the way back in 2018. It bottomed around 2018. And then it started to move higher through 2020, consolidated sideways. And then as you see right there on the chart, that last breakout that just happened in 2024, it was January 2024. And we saw this thing just take off to the upside. So the way I look at this is when are they making new 52-week highs and what should follow? So if you saw the new 52-week high, that was 2020 was one of the first ones. And then we saw the commodity complex really follow that, obviously. Now we're seeing another one in 2024. So right now is the time that we usually see the rest of the commodity complex really start to move. It usually takes about 10 to 16 months for these things to move. I think it's ready to go.
So throughout history, the lag is really that extreme because it seems like gold has been working for a long time and it's been the only one. That's not strange.
Not strange. It's usual actually. So if you go back, like once again, we just got off the gold standard in 1971. So if you want to really test it, you got to look at gold miners, even some silver all over the world to get an understanding of how it moves. So if you start to see gold start to move, you see this massive lag going all the way back to the 2000s one. Gold started to move, and then it really wasn't until '02, '03, where you started to see oil and the rest of the commodity complex start to move, and then those led the way for years to
Okay.
come.
Okay.
So gold usually rings the dinner bell.
So let's go. Next step, right? Because up until, I don't know, this week, really, Jason, I think doubters, commodity bull doubters could have made a really good case. It's just gold. There's nothing else there, guys. But now all of a sudden, we have evidence, right, that silver's ready to join this party. Like, I think big, decisive evidence this week. No?
Oh yeah. I mean, when we look at this, look, silver's hitting its first new high since what, 2011 now? It just keeps changing. It was 2013 the other day, and now it's 2012. It was
Yeah.
2011. Like it's gonna, I think it's 2012 still because 2011 was the peak. But once again, it's like silver just keeps moving, making new highs. It's breaking out of these major zones, and $35 was the most extreme zone in silver that we've seen in a while. It kept hitting
Yep.
that zone, bouncing off of it over and over again. People getting frustrated, which we love to see. A lot of people don't even want to hear about gold and silver right now. Everybody's writing it off. Really, it's a
Which is
silver.
crazy.
It's going to take time, just like we talked about earlier, Steve. Silver takes time. Next thing you know, we're over 35 and we're heading higher.
Silver has, if this move sticks, it sure looks like a valid breakout right now. This has 50 written all over it, and don't get me wrong. Let's zoom out for a second. Gold starts, then they typically say copper's next. Okay, so we're here copper, and then crude. But if you had to stick silver in somewhere, I think it would fall naturally between gold and copper as a quasi precious industrial sort of situation. So you got gold, you're getting silver now this week, and look at what copper's doing. A little indecisive, and I don't love the price action right here today, but this thing looks ready to go, does it not?
Oh yeah, for me over five and we're running, and I think we're almost there. I think what the market said this year, Trump came out, we had Liberation Day, we definitely liberated prices from going higher for a little bit. We had copper take a little crash really quickly, but what I love about it is it was like the market said we made a mistake and it
This is
got
change.
bought up really quickly and started
Yep.
moving higher. So I think over $5 this thing's taken off.
Sometimes it takes one of those, whip moves and then shake it back higher to really break out some of these consolidations. And that's what you're seeing now about, a month or two out from what Jason's talking about. And then if we just follow this sequence, this historic routine from commodities, crude oil's last. So I think for now, I mean, here, I want to hear your thoughts, but the way I'm looking at crude oil is look, commodities are an asset class in the same way that stocks are. I look at home builders and say, well, they got nothing to do with semiconductors, but I don't expect them to move in different directions over longer time frames, right? And that's the same way I'm going to think about crude oil with copper and gold. If copper and gold are ripping higher, breaking out of these massive bases, shout out silver, right? Just talked about that one too. Is crude oil really completing a multi-year top? Like that's a nasty top in crude oil.
I'd be surprised to see crude oil just break straight down here. It's kind of the thought I've had all year. Like a lot of people have been calling for crude oil under 50, and I've just kind of been like, I'd be very surprised in the market environment. Just like you said, when we look at things leading, we see the banks leading. Steve and I talked about that a ton at the time. That's telling me the market's in okay condition. That was in 2023. Everybody was basically writing off the market.
Yeah.
Banks basically were supposed to be the worst thing in the world. Next thing you know, the banks are moving higher. Showed you that the market was pretty healthy. Same thing here. Gold is moving higher, copper's moving higher. I think the commodities market's healthy, but I just think that you got to be patient on oil. It's always last, it's always the laggard.
That's right.
Even think about 2020. All the commodities bottomed in March 2020, and then go to April. That's when oil bottomed. That was the negative. Crude oil hit negative $50 in the front month contract and then finally moved higher. So crude oil is always last. Give it some time. It'll absolutely start moving, but I would just be very patient on it. Don't take buy signals just because gold's moving. Wait for the actual price action to also match up.
Yeah.
But I think there's a bounce trade here still above 66. I think that's a nice
I
false break.
agree. I agree. We're putting on some bounce trades. in it now. It's very cute. Don't get me wrong. But I think the bigger takeaway for primary trend investors is if all these other things are working, don't be short energy. You know, give it
Yeah.
time, let it dance. I don't think this is a top, but that's it, right? So that's the stage is set for commodity market participants. That bullish puzzle that we see throughout history is really coming together one step at a time, right? The picture is becoming clearer and clearer that a new upleg for commodities is upon us. So now we're going to rip through every subgroup, give you guys our commodities playbook. We're going to drill into each one of these areas. We'll share some of our best ideas right now, but this is what we're doing all day, every day, especially lately, right? And Jason runs our Gold Rush column, which he's just looking for the best opportunities in commodities all day long. Isn't that right?
Yeah, Sam and I are always with our head down. Rick's in there doing great stuff with the
Yeah.
currencies and how it works.
Everybody,
I mean,
everybody
everybody.
wants in on
For,
Gold Rush
yes.
these days. And it's funny, guys, because it's usually not that way. I've been running the analyst team for a long time now, as long as ever, at All Star Charts. And it's usually the opposite, Jason. Did you know that?
Really?
Usually everybody's like, put me on the equities stuff. I want to be on the stocks projects. I don't want to do the commodity stuff. Like that's what we give to the new guys usually. But lately, everybody wants in.
Yeah, everybody has a trade in one of them, and once again,
Oh,
it's
yeah.
a the commodity complex is huge, and a lot of people don't even
It
know some
is.
stocks are so involved with the underlying commodity.
Yep.
So, that's what we do great here is understand the underlying commodity. We know you guys don't all trade the futures contracts like I do, so we dig into it and find the individual stocks that you guys are trading, and then give you guys ideas based on that. So that's what we do over at Gold Rush.
Run it back with gold, Jason. Tell us the story. Here we are. It's like target hit, target hit. Really? We should expect more? What's the deal with gold?
Everybody says gold's a top, yeah. So it must be a top. It must be the end of it right here, right now. I'm just kidding, but everybody has said that, and for me, I love this, and this is part of the reason why, like at the Gold Rush, sometimes we run into things where people are a little bit behind the curve. Gold miners are up over 50% this year, and still, it's not something that's very mainstream. You're not hearing it talked about quite a bit.
No,
So
not enough.
everybody's talking about this being a bubble and all this stuff. For me, it's just central banks got in early. They started buying gold pretty heavily. And then, next thing you know, the miners finally started to catch a bid. That was just this year. Now we're seeing these miners up over 50%, which is wild. Some of the names are up over 200, 300%, even better. So I just think it's a normal gold cycle moving forward.
And if the chart of gold looks extended to you, right? Which fair, right? Okay, two targets hit, base on base, massive breakout. What more could you want? It's been a great trade. So if you think you're late, I would take a look at this chart. This is the junior gold miners. A decade in the making, almost a decade and a half, this base, right? Just now breaking out. This trade, if you're looking back at those old highs over there, it's 2-3x from here, right? This is just getting started. The animal spirits are alive and well. Here's gold, junior gold miners versus gold producers, right? Which is like a risk appetite ratio, just breaking higher now. This is GDX, the big gold miners and producers, just breaking out of a similar big old base. I think you're still early. And maybe go away from spot, hit up the miners, and if not the miners, I think silver is pretty actionable and just happening now too.
Yes.
So there you have it. We have options to express this thesis on precious metals.
And what Steve's talking about here was silver. When we look at silver, we have to understand what GDXJ is comprised of a lot of silver miners too. Some of the biggest name in silver miners are in
Great point.
GDXJ. So seeing that that's now just starting to break out, I think that's where the money's going to be made going forward. The way the cycles work, just to give you guys a good overview, it's gold, and then we usually see the big name miners, like names like AEM, which hit new highs last year, I think. And then we start to see the rest of the mining complex start to move with it, and then the juniors, and then we start to see some of the obscure metals like platinum and palladium. We're already seeing platinum making a big move. The miners are just the first ones to it. I think the junior miners are where a lot of money is going to be made going forward.
And all these commodity subgroups are the same. It's the same way that like Exxon and Chevron and the multinationals work first, and then these, sketchier exploration and production companies or the offshore drillers really move last, right? Same thing with precious metals. The big guys go, right? And really it's the royalty companies first. Like look at a chart like wheat and precious metals. The royalty companies go first, and then the majors, and then the junior golds, and then the sketchy silver guys. And then you got charts like First Majestic, AG, breaking out of these massive bases. So here's silver, spot silver, like we said, 50 written all over it. And to me, Jason, the most important chart, I did a little note, I don't know, 3 weeks ago now, I said silver's leaving the station. I was early as usual. But at the end of that note, I said, the way you'll know that this move is real is that this chart right here is going to have like the biggest scoop and score written all over it. And it's going to be scoring hard and confirming that breakout in silver. And that's happening this week. Silver gold is momentum thrusting, scooping higher, huge level, back into this range. And that's really what you want to see. We look at this one, guys, as a big check mark for risk appetite. Those gold bugs are out, right? The animal spirits are alive and well in the precious metals trade.
Yes, absolutely, Steve. I love the GDXJ to GDX ratio, this ratio. And really, if you're just looking at these on their own, you can see where that market should be going.
Like this is it for risk appetite. Like Jason said, the juniors versus the producers, bang, big base breakout. Silver versus gold, bang, big recovery move. From failed moves come fast moves. That's what's happening here. Here's a little scan. We're doing this all day. Jason is literally looking at this scan every day. I'm positive because I see the chatter in our Slack. I see the charts being shared. We've been all over trades, whether it's Alamos Gold. I see the MAG now. The SSRM has been incredible. We'll talk about platinum and palladium in a second. That's another kind of ancillary, spicier play. Anything stand out on this table? A lot of international. I like that.
Yeah, I think that's the thing that we're starting to see in the sector generally is we're starting to see a lot more international breadth, whether you're looking at tech stocks, whether you're looking at commodity stocks, gold stocks, whatever it is. So looking at this though, I think we're just kind of looking at, hey, these things are all getting close to new 52-week highs because they've all been in uptrends for so long.
Yep.
The market caps on some of these are very small. I'm not saying they're, $1 billion is small, but smaller than the big names in big tech like you guys are used to. So they have a lot more upside than some of those big names do. So these things can double, they can triple. And if you've never seen a precious metals rally, like there's no fever like gold fever. So this thing will severely take off to the upside at some point very soon. 50% in the miners is probably going to look like a joke in a year or two.
No, you're talking about many multiples higher. And I tell the young guys this, and I think they don't believe me. I tell them, I say, when commodities trend, like they trend like speculative growth stocks. Like it's crazy. And I feel like it's been so long, Jason, since we've really seen that. Like we got a taste of it in 2021, but it didn't last. I feel like it's been a really long time since we've seen like a melt up in commodities. But God, when these groups go, there's nothing like these cyclical stocks. So let's move right along here. Here's Ego breaking out of a nice base. Here's First Majestic. I want to get Keith Neumeyer on the morning show because he's like the Michael Saylor of silver. He's Michael Silver. Unhedged, like fully leveraged to the price of silver. They have these really, really spicy, highly offensive vehicles in the equities market to express theses on commodities. Do they not?
Oh yeah.
Like we can go OTC, ADRs, we can get really weird in this space and add as much juice as we really need to.
Yeah, and then there's lots of options to trade. There's a lot of options in those markets. So there's a lot of ways to do it, but really it's hey, the miners themselves are going to make some big moves. The options are going to make even bigger moves. Just be ready for it. Don't write it off. Don't think, hey, I need to be in big tech because it made me a lot of money the last couple of years. Markets rotate and they change. And a lot of our playbook has changed. The weak dollar cycle changes the game completely. Right. So we're going to find a lot of these weak dollar plays that people haven't used in years because the last time these things really moved, which was crazy and outperformed the market, was in 2000 to 2008. All the way to 2011, actually. So keep open-minded to the miners.
Jason makes a great point. We're trying to stay away from currencies right now, but it's tough too because it really is part of the same conversation. I'm running like really large, like a heavy short dollar exposure in my accounts right now. And I'm thinking of my commodities assets in the same exact way as I'm thinking of my international equities assets, right? Because they're dollar denominated assets. And in this environment, I think that's really important. This is something that the guys write about a lot. I'm writing about a lot on the All Star Charts blog. But let's move on. More commodities. Dude, speaking of international, all of these scans are littered with Canada. Canada is the world leader when it comes to the stuff we're talking about on this call today. This is the Vizsla. I think it's just like the best name. I love Z's. VZLA, $700 million market cap Canadian mining stock. Bang, look at this base. This is the kind of stuff that pops up in our scans. The guys were in at 240, 330, and this took what, 2 weeks, Jason?
Yes.
Sam was just yelling at me. I was saying, "Man, this Orla is a great trade." He's like, "Dude, the Vizsla, the Sizzla, the Silva is better," and I think he's right because it was quick, right?
It's quick money, and we talked about this before, which is, we will trade it any way it comes to us. If it's a quick
Yeah,
trade, we're in it and out of it very quick. If it's a long-term trade, we're in it, we'll ride the trend. There's lots of different trading styles and methodologies here, so definitely have a lot of money to be made here. But this was a great one. If you look all the way back, it's kind of that old O'Neill method where you get back up and over the old
yep,
when it was basically listed. So the IPO high, get over the IPO high, and next thing you know, it just kind of takes off to the upside and doesn't look
that's
back.
right.
Now it's above the next level, probably heading to the next target around 480. Our clients got in there very early, so we're always
That's right.
happy about that.
45% in days. And one of my personal rules is that in euphoric stages of bull markets, which God, it seems like gold is entering now, or precious metals are entering, you always overweight the tickers with Z's in them. So that would have really worked here. Let's vibe a little bit about some of the ancillary precious or quasi precious metal plays. This is an equal weight index of platinum and palladium futures overlaid with our vehicle of choice, right, for this particular subgroup. This is the Sibanye Stillwater. I believe it's South African stock, breaking out of a perfect base here. And man, when they go, they go. And the best trends don't give you a chance to get in. This one blasted out of a base, chopped for like 3 days, and is now ripping higher again. SBSW against 5 3/4. Look, this is what happened last cycle. You could buy platinum, or you could buy palladium, or you could go with the Sibanye, right, and get 7x returns. So that is the move. There it is again. Base, another base. I think you get confirmation when the index breaks out, right, Jason? But we're looking at 8 in this one, but I really think you want 20. Let these guys run. If what we think is coming next for commodities, I think you'll have time. You could be patient with these trades, and these are massive trend reversals, right? And not just in the stocks, but here's platinum futures. Same thing. Beautiful textbook rounding bottom formation. It probably goes. You got some sort of double bottom situation in palladium, like that one just as much. Platinum has some sort of, tailwind in the form of central banks around the world adopting it and adding it to their reserves. I think that's really cool. We're always digging into the OTCs, Jason. This is one I said, all right, fine, we can give this one. Impala Platinum. This is a Matt Warder stock. We know a couple of experts in the minerals space. We had such a great conversation with Matt the other day.
Oh,
But this
he's
is
great.
IMPUY. I mean, 7 1/4. What more could you want? I think this one has 21 written all over it. Here's the coil. This is a super zoomed out monthly look at palladium. That's tight at a key polarity zone that dates back a decade and a half. You got the monthly PPO crossover, right? Think of the PPO as a MACD. It's a better MACD. So palladium looks really ripe here for a big squeeze. Here's the Orla. I think this was another one you guys have been all over. I had never heard of this name. Recent issue, actually, and that happens a lot in the gold mining space. Like there's ones that have been around, Jason, for 30 years that have been bad forever, and they're like still somehow here, still raising capital every couple of years. And then there's other ones, they hit the market, they're hot, they rip for 3 years, they get acquired, and you forget about them, you never hear about them again. Like I remember Kirkland Lake, KL,
Yep.
was last cycle. It was an IPO, it went up 1,000%, and then it disappeared. Orla's going to be one of those, is it not?
I mean, the space, and you and I talk about this all the time. The space is the reason why these stocks don't just go up every year and work with the S&P 500 is because a lot of the, like mining is a pretty terrible business. It's a tough
Yeah,
business. Um,
awful.
it's awful business.
You
But
can't scale it.
yes, but when you're in a precious metal cycle and everybody's looking for gold in the ground, some of the stocks that you're going to make the most money in are literally empty holes in the ground. So it's going
Yeah.
to be very hard. Like once again, you got to really know the space. This is what we do well at Gold Rush. Sam is great at finding the exact names, figuring out what's going on inside those exact names, and making sure you don't get burned by it. So we do that very well. But if you're just new to the space, stick high level, stick to the ETFs. It's very hard to pick these smaller names if you don't know them.
They're unlike great software and tech businesses, there's like zero economies of scale
Yeah.
in natural resource business. But what there is a ridiculously high degree of operating leverage from the sense that even semiconductors and software, their prices aren't doubling in a year. Some of these commodities, Jason, correct me if I'm wrong, prices will be up 100, 200, 300%. That's just straight to the bottom line
Yeah.
for these businesses. So when the prices of spot move for these markets and somebody's highly leveraged and unhedged to a certain commodity, then they have these incredible operating leverage models, which are super cool. And then they end up looking like software stocks.
Yes, and not to mention some of these returns, like they'll be the reason why we do so much all over the world is because there will be times where the software stocks, the technology stocks aren't really going anywhere. And then there's other
That's right.
stocks that are going everywhere. And
That's
right
right.
now, the gold miners are the ones that are moving. The copper miners are starting to move. Platinum,
And,
palladium, all these things are looking good. So we like the
and you
metals here. It's going to be interesting going forward.
and you know what else is happening at the same time? Because you're right. This stuff is working more and more. And then these other trades that have been working and have been leading off of the lows, the speculative growth stuff, seems to be getting awfully crowded. That's all the talk these days. Nobody's talking about the breakout in silver. Everybody's talking about trading rocket stocks. So I think we're going to keep zigging while they zag. Let's hit energy now. We spent a lot of time on precious metals. We're going to fly through some of these other groups because precious metals is the best one, right? That's where we're heaviest right now. We're starting to see this expansion and participation. Energy, though, is a laggard. Jason, why don't you talk about it?
Yeah, energy's
Big lag.
lagging. Very normal. Very normal for energy to lag the way it has. Very normal for crude oil to have actually a false breakdown before it actually starts to move as well. So
Yeah,
just kind of looking at
right
this,
there.
yep. And now we're kind of, for me, it's like up and over 66. I'd be really interested to see where crude oil heads from here. So for me, I'm just kind of waiting for that. Same thing. Everybody in the world knows about XLE. Huge level here. Steve posted this chart a while ago. I used it once. I stole it straight from Steve, being honest. So getting up above that level of 92 will be extremely important.
So
This is
tight.
yep, tight compression all the way from going back to 2008 all the way to where we're at today. I think once we get over 92 and then especially 100, that thing's going to take off to the upside.
This is one of those setups, Jason, where you got to look at it and you say huge level, coil, multi-year, tight range. Look, you could see the volatility compression in the lower pane here. Wherever it goes, I just want to be on board, right? Like if it's up or down, I don't know. And then my sick intermarket brain, I just can't help it. But then my next thought is look at silver and look at copper. And gold is one of the best performing assets this year. So energy is going to break down. So it's just hard for me. It's a big intermarket lean for me at this point for energy because the charts, you're right, they don't look good, right? That does look like a top in crude oil. So it's mostly intermarket in my ear saying, but it can't be, right? So, and then we got natural gas.
And natural gas is another one that, just getting above these major levels, getting above $4 for me would be very significant. And then we
Yeah,
could see where we end up. Heading back to those old highs around $10 is very, very possible. A lot of people don't know this, but natural gas is up over 100% over, I think, a 1 year time frame. So
it's
natural gas has
crazy.
already made a huge move. I just think it has another huge move inside of it, and we just got to
Yep.
be ready for it.
This is for the beta people. This is one of the crazy ones. And like vehicle of choice, I mean, CRK, not to say anything too crazy, but if we were to just go back to the highs from a decade ago, that's, I don't know, what, 6x from here? It's like 150. This thing's
Yep.
breaking out of a base in the 20s right now. Jerry Jones is just a huge owner of this stock, big Jerry Jones stock. So this is one of the purest natural gas plays. No, nice base.
Yeah, absolutely. So if you want to get in on that trade and you want a great product to be in for that trade, CRK is absolutely it. Probably hitting
Actionable.
56 is yeah, it's actionable right now. CRK is absolutely could hit 56 pretty easily. Get back to those old highs. We like this one a lot. A lot of us on the team actually are really digging this one. A lot of trades there. So let's see where that one ends up.
All right, let's move over to the farmland. NRG Energy, that's another one. This is like an AI utility. Boom, nice move recently. Coal, there's really not much to say about right now. We do like coal. We're happy to buy coal stocks. We've done it in the past. We'll do it again. But this is a much even larger laggard than traditional energy. Here's natural gas overlaid with fertilizer. I think there is something here. This is a chart from Rick. This is a really good one. Stocks like Mosaic have been some of the best stocks over the course of the past 2 months, like since the broader market bottomed back in April. So I think there's really something there with the grains and the livestock and the agricultural commodities. So let's hit those now. This is corn backing off of some sort of basing pattern for now.
Oh yeah, I mean corn, soybeans, go down the list, Steve. There's a lot of them here that are just
The
kind of really
basis.
struggling, but they're not going lower anymore. So
Right.
that's something that's significant. And usually the grains are the ones that move with oil. So if I start to see soybeans start to take out those levels, I
Yep.
start to see, let's say, corn starts to move higher. I'm going to definitely think that oil is going to move higher as well.
So soybeans, soybean oil, they're basing, they're not ready yet, still messy. You tend to get false starts out of these primary trend reversal patterns. That's what's happening here. This is a zoomed out look at soybean meal coiling at a big support level. Wheat also coiling in a big drawdown. And then here's Mosaic. Talk about volatility compression. We call it falling wedge, right? Boom, bang. That was a nice trade, kind of tipping you off. A lot of times, these equities, the stocks will move ahead of the futures markets, right, Jason?
Absolutely. And that's the thing that kind of tips you off. And that's the thing you really want to see if you want to be long the commodity. If I want to be long oil, let's say, I want to look at XLE, XOP, OIH. I want to see what those are doing. Because if we're seeing money flowing into those and they're showing relative strength to oil, that means that most of the time we're going to start to see a move in the underlying commodity.
John Deere, another good one, right? We have different vehicles.
It's a
Let's hit
fantastic one.
livestock. Hmm?
Honestly. Deere is a fantastic one, honestly. Like John Deere is one of the most fantastic names that could go in a long-term portfolio that a lot of people don't really look at. And it really
Great
makes
stuff.
money. It's a very smooth trending product. And right now it's in a new uptrend. I
And
think
you
it's
could
still actionable here even.
And you could see the agricultural bull markets in this chart and the way that John Deere moves, right? It goes into rally mode and then dead sideways and consolidates for, 5, 10 years, right? Rally mode, huge consolidation. Big rally mode, huge consolidation. And what's happening again, right? This monthly momentum indicator, the PPO here, has done such a good job of spotting where those consolidations are resolving, right? And when to get in, it's happening right now. So I think that's a big, you know, feather in the hat for agricultural bulls.
Absolutely.
ASC livestock index. What are we doing here? A little bit of cattle, a little bit of feeder, a little bit of lean hogs.
Yeah, just taking a look at the overview because really the thing that a lot of people don't pay attention to because a lot of people pay attention to commodities, but they don't pay attention to livestock. Livestock has been the one that's really led the way this whole
Yeah,
time. And a lot of people were saying, oh, the commodity cycle is dead. It's like, well, Sam and I are sitting here watching the livestock just go crazy. Feeder cattle went up a lot. Live cattle's been in an uptrend for years. So if we look at these, we're just kind of seeing these are very strong, and that also puts a lot of pressure on corn, soybean meal, and the reason
yep.
is because they're feed for the cattle. So as those are feed, you're going to see pressure there. So at some point, this is going to turn around and start to turn down, and that's when the grains are really going to start to move. So it's something to keep on your watch list. See when this thing actually rolls over, and then you'll probably see a move in the grains, and then after that, you'll probably see a move in oil.
And how about the hogs? Should we expect them to follow the cattle charts look better? Should we expect hogs to follow? Because we're pretty tight here coming out of a nice base.
I think cattle, or sorry, hogs. I'm long hogs at the moment. I do like the idea of being long hogs. I think they have a lot of upside to go. There's a lot of fundamental reasons for that. Technically, it looks perfect.
Yeah.
So I really think it's a great trade that a lot should be on people's radar, but just a lot of people don't trade it. It's an easy to trade product. It's HE on futures, but once again, a lot of people don't trade hogs.
All right, let's run through the softs quick before we get out of here. Cocoa's been an absolute killer uptrend. Taking a breather here.
Yep. Coco's been one that, it had that huge move. It was like 200 and something percent in, I want to say 16 months. And then it
Well,
went
they say the
sideways.
bigger the base, the higher in space, and is that
Absolutely.
not what happened here?
And Coco had the biggest base, 47-year base.
47-year base. Love that.
And just that huge move that started to happen in the 2020s. You started to
Yep.
see it finally do this. And I always tell people this story about Coco, I'll try to make it fast, which is as a trader, I literally watched every single person who ran Coco in the systematic trading or discretionary trading models, and they all quit trading it by the time it broke out. Because it was so frustrating. It was hard to trade.
Yeah.
It went up. You got stopped out basically all the time over and over again for a good 10-year period. And then next thing you know, this thing took off. So we like to have things on our watch list for a long period of time. And this is why we wait for those big base breakouts. So you're not just stuck in a bunch of chop all the time.
190% in 4 months. What a move. Coffee, another massive base. I mean, these charts are going back to the 1970s. Look at this base breakout in coffee. This one looks a little fresher. No? One target hit. Probably
Coffee,
failed top here. No?
I think coffee's probably got more to go. I think it's also goes with our South America story. South America is doing a little bit better. If you look at the emerging market GDP compared to the rest of the world, emerging markets are actually have a higher GDP than the US or developed markets at the moment. A lot of the time when coffee is moving nicely, you'll see countries like Brazil start to move
Yep.
as well as Vietnam. So
Colombia.
Colombia, yep. So when we're seeing those moves start to happen, so I think that coffee's just taking a breather here. It was early to the party. It made a huge move going all the way back to 23, all the way to this year. So I think it's just going to
Mhm.
consolidate here and then probably move higher.
Love it. Big base. Cotton, this one looks pretty terrible. Really nothing to say about that. Sugar, probably not a top. What do you think?
It might not be, and it could be. For me, it's a wait and see. Like look, like exactly like you say. Let's look for a scoop and score. We get
Yeah.
back above 1725. I'd say, hey,
Don't
it's
see it.
worth a shot because
Yeah.
if you're looking at the energy sector and you're looking at the grains and you're saying, well, all those are moving, sugar usually moves as well. And sugar, when that thing moves, it makes really huge moves very quickly. So we want to keep that one on our radar on the long side, but also not be afraid of the short side. That's the one thing that's nice about being a technical trader. We can put out trades either way. Sam and I will short products just as well as we will go long them.
This one's good. Orange juice. Massive base breakout. Nasty retest, but boy, do you have a level there.
Oh yeah. Orange juice is wild. So it was
Zooming in.
yes, it was the crazy trend of 2024,
Yep.
2022. I mean, this thing just continued to go up for a long time, and then it got sold off really heavily very quickly, which is very normal. Like this is a very thinly traded product. So because these products
Right.
are thinly traded, you'll see the uptrends happen very quickly, and you'll see the downtrends happen very quickly. So you have to be very tactical as you trade these things.
Lumber is for the crazies, but we do cover that too. Jason, do you have any thoughts on lumber? Just first glance here, it looks a lot like the others. Massive. You guys are so specific. 37-year base breakout. Absolutely love it. Hard retest. Then in light of everything else that's going on, this is probably a valid structural base breakout, and we should expect higher prices.
Yes, and it tells me a lot about what's going on in the market. When you look at copper, you most of the time when copper is really running, global stocks are doing pretty well as well. When you see lumber moving, it's telling you the same thing. There's global growth somewhere in the world that we need this lumber for. I think lumber is probably moving higher. That's my call on it. I do have a position at the moment. I know a lot of people don't trade the lumber futures. You can look at the Wood ETF and find paper stocks inside of that one, which is a good way to play this if you are looking at the lumber futures. But yeah, definitely try the Wood ETF and some of the stocks like International Paper, Warehouser, and so on inside of it.
So look, that pretty much brings us full circle. That's our commodities playbook. Thank you all for joining us. This story is really simple, though, guys. Right? Just want to go back to what we talked about up at the top of the call. Gold moves first. Silver's going now, confirming that breakout in gold and saying, yep, precious metals, bull market, it's on. Now copper's going. So you got the industrial metals complex going. I mean, copper looks already. Give it some time. I'll bet you copper goes next week. And if you see that, think back to this video and the stuff that we talked about, and then look at a chart of crude oil. It's probably not going to be a top. So all of those puzzle pieces are falling into place, right, for a big commodities bull run here. And I don't think we're early. I think we're right on time. And we're listening to the message of the market, Jason and I. We're putting on trades in more and more commodity subgroups. And the market keeps telling us that we're on the right track and continues to reward us, whether it's the breakouts in silver, getting long stocks like Freeport McMoran, Southern Copper lately, these big bases and stuff like Hudbay, natural gas leaders working like CRK, right? All of that information is coming back to us and saying, do more and more commodity stuff. And that's what we're going to do. So this chart depicts it pretty well. If you look down in the lower pane here, we're tracking market internals all the time, and participation just continues to broaden. So what does that mean? It tells us there's going to be more and more opportunities, more places to go, more vehicles that we're going to be bullish on and want to be buying. Equities markets and futures markets, right? Some of these subgroups will have to pretty much stay in the futures market for. Other of these markets like copper, gold, silver, will be all over these equities, right? And you have some really, really great vehicles. So this is the stuff that Jason's doing all day. He runs our Gold Rush product. That's a part of our All-Star Charts premium offering, right? So Jason, just talk really quickly about what you guys are doing there and what everybody gets on a weekly basis in the Gold Rush column.
Yeah, so Gold Rush, just so you guys know, Gold Rush doesn't just cover gold. It also we cover the energy
It's a
markets.
misleading name. It's a
Yeah,
misleading name. It's really
it's a
good.
great name, but it's misleading because we
It's
cover it all.
great. We
From
love gold.
bonds all the way to currencies, individual stocks inside of certain countries that could be based on a commodity and so
Right.
on. Like we cover it all. Any of the sectors like oil, fertilizer stocks, uranium miners, and so on. Like we cover it all. So if it has anything to do with energy, has anything to
Yep.
do with precious metals, you get it out of the ground, we're going to be talking about it. So you basically definitely want to check that out. We're going to be putting out more and more trades as the year goes on. And so far, so good on the gold miners.
And we do this as a part of our All Star Charts premium membership. And you can buy Gold Rush separately, but why would you? We're running a special on All Star Charts premium today. We're adding more and more scans, a lot more commodity focused scans, value and cyclical focused scans, ex-US, short dollar scans, right? All day long at All Star Charts Premium. A lot of this research is happening with Gold Rush. Jason and Sam and the other guys are running it. But like I was saying, earlier, everybody's getting in on it. I've been doing more commodities research and more commodities reports than I can remember in the past 5 years. So become a member today. The special is $8.50 quarterly. You get it for $24.95 annually. Email us info@allstarcharts.com if you have any questions, or give Mary a call. Numbers right here on the slide. But come join us. You could join risk free for 30 days. Check out the kind of stuff that we're doing. But I've been here before, Jason, and the writing is very much on the wall. I know we're going to be talking more and more about commodities in the future. We're going to be diving deeper and deeper into these different subgroups. We're going to be finding the best opportunities, the best bullish chart patterns, right, in the commodity space. And you're going to be writing about them every day out here
Every
with
day.
Sam, myself, and everybody else. So, you got any final words for everybody before we get out of here?
No, I just think you're absolutely right. I think this is a great time to kind of get into something that's going to give you some an edge in the commodities market. Not everybody has one. For me, as a trader, I've been trading. I mean, I've known about the commodities market and learned from my uncle about the commodities market all the way when I was 14 years old. Continuing to do it, understand the value of gold, understand how to trade it well. These are things I've built over the years. So being able to give this all back to you guys and having a great team like Sam, Rick, Steve's also, asking me about COT reports now, which is something that's very interesting because we talk about the COT reports and the positioning in those models as
Sure.
well. We talk about all of these things all at the
Yep.
Gold Rush. So definitely check it out. We're glad you guys joined us. Thanks for talking with me in the chat. It was a lot of fun hanging out with everybody.
And I'm just so grateful that I get to have these conversations with Jason, right? And just blessed knowing that I can write about palladium or platinum or the crazy markets in natural gas and lumber. And that there's people who want to come here and talk about it with us and read our stuff. So, guys, join us today. We're having fun out here. I think we're only going to have more fun trading commodities in the future. There's nobody better than Jason to run that effort for us. So allstarcharts.com, check it out. Click the link, 850 quarterly, 24.95 annually. Everybody, thank you for joining us on this special Friday live stream. I hope everybody has a great weekend. Any final thoughts, Jason?
Nothing left, man. Just excited to enjoy the weekend. Hope everybody else is going to have a great weekend. Get off the charts for a little bit, maybe read some of our fun reports instead. And
Yeah.
we'll see you guys next week.
All right, everybody. Thank you.
Thank you, Steve.